Hello and welcome to class number 7 of the UPSC Prelims 2024 Quick Revision Series, where we are trying to wrap up all the current affairs of the last 1 year or so before your prelims examinations so that you are right on track to clear the prelims on the 16th of June. In case you have not watched any of the earlier classes, I am giving the link of the entire playlist in the description of the video. Go through that and make sure that you see all the classes. Also, in order to get PDF of these classes, you can join the Telegram channel. The link is in the description of the video, where I upload all the PDFs of the lectures that I conduct on this platform. Having said that, in today's class, we will be discussing important news from international relations and on Indian economy. Last class number 6 was also about international relations. Few other topics left, and then we'll jump on to the big Indian economy topic. First big news, the Paris Club. Sri Lanka reached an agreement with the Paris Club. What exactly is this? So Paris Club is a group of very rich countries, OECD countries that had come together in 1950s. The idea was that they will help the smaller countries that are in need for loan. They will renegotiate with them payment terms so that they can help them in their development process. As you know, ever since the COVID-19 pandemic hit, Sri Lanka has been in a big financial trouble. They have been seeking loans left, right and center. India has also given a big loan to them. Now, because they are having trouble repaying those, they are now trying to renegotiate and they have reached an agreement with the Paris Club. So Paris Club has a total of 22 official creditor countries established in 1956. All 22 are rich countries and are members of OECD, that is Organization for Economic Cooperation and Development. India is not a member. India, although, does have an observer status in this organization. What do? This club offers credit facility to eligible countries, to countries that are in debt, and they try to reschedule the debt as per their convenience. They mainly try to ensure that the financial situation in these unstable countries improve. Another big news, India led a new initiative to the launch of International Big Cat Alliance, IBCA. Now, the government of India in the past few years have been trying to take initiatives at the global level, be it the stature that we had at the G20 hosting, inclusion of the African Union in G20, before that the International Solar Alliance that India began. This is again in line with that kind of a thinking where we have to make an impact at the world stage. So India has set up International Big Cat Alliance. Now, these big cats basically include 7 major big cats. Do remember this. These 7 are tiger, lion, leopard, snow leopard, puma, jaguar and cheetah. So these are the 7. The idea is that the countries that have a significant population of these 7 can come together and can pool in their resources, their expertise to preserve and increase their population. This was announced on the 50th anniversary of Project Tiger. The government of India wants to ensure that we play a major role in preservation of these big cats. The membership is open to 96 countries that have a good population and that are a natural habitat of these big cats. Other countries can also join. It's similar to International Solar Alliance. When International Solar Alliance was first launched, membership was open to tropical countries mainly because this is where they have significant days of sunlight. Then it got opened up to other countries as well. Similarly, International Big Cat Alliance is open to other countries as well if they are interested. Already 16 countries, 9 international organizations have given consent to join. Again, with every single day there may be more countries coming in, so this number may not be fixed, it will keep on changing. Also, this particular alliance will have a general assembly where all countries will be members. It will have a council of 7 to 15 members, a secretary general, and the secretariat that will act as the administrative body. It will be established in India. What about the funding part? India has offered a 150 crore rupee fund for the initial 5 years, and after that we'll have to see how we can accumulate enough funds from membership fee, from contribution from different institutions, private sector. A lot of international NGOs may also pitch in. Their job mainly will be to ensure that any potential habitat of these big cats is preserved, share knowledge with each other. For example, let's assume India started an initiative that really led to increase in population of these big cats, we should be open to sharing it with other countries as well. So that is how it becomes a platform for knowledge sharing and capacity building as well. It will also focus on building ecotourism and finance tapping from all around the world, because such projects, in order to be successful, do require significant amount of financing in the long run. This is a snapshot of International Big Cat Alliance. Now we jump on to a heavy subject that many of you would have been waiting for: Indian economy. Over the next 2 to 3 classes, or maybe 4 classes, depending on how many topics I find out, we will be discussing topics relevant to Indian economy. Now please remember, Indian economy, I would characterize this as including smaller parts like agriculture, infrastructure, all of that are considered a part of economy only in GS3. So if I discuss a topic from agriculture here, don't be confused. It's mostly a part of GS3, that is Indian economy. So let's see what have been the news related to it. First, news about urban cooperative banks. So a few months back, the RBI made some provisions to further strengthen the operation of the urban cooperative banks in India, to ensure that they have more freedom, to ensure that their working conditions improve. What are these new provisions? Number 1, these banks can now open up to 10% or maximum 5 branches of the previous year's total branches without RBI approval. So for example, if they earlier had, let's say, 40 branches, next year 10% of that, 4 branches they can open without any approval from the RBI. Means the red tape has been cut down and they can expand even further. Second, the criteria for financially sound and well managed banks. So basically, those urban cooperative banks that are seeking branch expansion, that want to expand their branches, they must get board approved policies in line with the norms that have been set by the RBI, which are for financially sound and well managed banks. When an urban cooperative bank is fulfilling these guidelines, these norms, then they can go ahead and open up the branches without the RBI's prior approval. Cooperative banks has also been given this chance to offer technical write-off and settle their borrowers through board approved policies, which makes them in line with commercial banks. So commercial banks can have a write-off. Write-off means bank has given a loan of, let's say, 10 crore rupees. They know it's not coming back. Rather than keeping it on their books every single year, passing it on that we have given a debt of 10 crore, write it off. Write-off means agree that the money is not coming back, so that you can remove it from your books and then you can move forward, rather than including it every single year. So commercial banks could do this openly. Now the urban cooperative banks have also been given this provision that they can also have this technical write-off through board approved policies, so that they also get freedom like commercial banks to clean up their books. Next, the target for priority sector lending. Now, as you would know, there are certain sectors that the government of India identifies as priority sectors like education, farming, etc. And the banks are supposed to give a part of their loans to that sector so that it can get easy access to credit. That is called priority sector lending. Many banks are not able to fulfill their target. So for urban cooperative banks, RBI has extended the timeline for these banks to achieve their priority sector lending target by 2 more years. So they have to achieve the target of their lending to the priority sector by 31st of March 2026. These are the important provisions. Then also, apart from that, RBI said that they will designate a nodal officer for closer coordination with these urban cooperative banks, so that they don't have this problem of not being in touch with the Reserve Bank of India. There are a few other details about urban cooperative banks that you must know. Urban cooperative banks since 2020 come under direct supervision of the RBI. The RBI can supersede whatever they want to implement in these banks with the government of the state and its consultation. These banks are categorized into different tiers. So there are tier 1 banks, and then there is tier 2, 3 and 4. For example, tier 1 banks have a single district requirement of at least 2 crores net worth. So if you have at least a net worth of 2 crores in a single district, then you're a tier 1 bank. For other 2, 3 and 4 tiers, you have to have a minimum net worth of at least 5 crore if not more. Similarly, the capital risk to weighted asset ratio, that is also different, CRAR as you call it. For tier 1 banks, it has to be at least 9%. For tier 2 to 4, it has to be 12%. This is to ensure that the banks remain stable, that they don't give out so much loan that if the loan does not come back, then they are in trouble. For priority sector lending, 75% of their loans must comprise of priority sector lending. So again, it's not easy to give 75% of your loan to priority sector only. Priority sector includes MSME, agriculture, education, housing, etc. Have you ever wondered why the banks are easier to take education loan or housing loan? The banks usually give out these loans on smaller or on shorter basis without doing a lot of very minute scrutiny. The reason being that the banks also know that they have to spend a significant amount of money in loans into priority sector. For urban cooperative banks, the target is 75%, which is huge. That is why they are being given 2 more years to achieve this target. Next news is about greenwashing tech sprint. First, what is tech sprint? Tech sprint basically a kind of an event where you invite coders, you invite companies working in the technical sector, give them a problem that I want a program or algorithm on this in the next 48 hours or in the next 72 hours. Give them a strict timeline, give them a problem and ask them to come up with a solution to this problem in the next few hours or few days, etc. This is called a tech sprint. So what has happened here? RBI has invited companies to participate in greenwashing tech sprint. Now what is greenwashing tech sprint? So basically greenwashing is a practice that the companies do. When they are opening up, let's say a new office, they're launching a new product, they will try and tell the people that see our new product is very helpful for the environment, or the way that we are manufacturing our stuff, we are helping the environment. So they present this false image of helping the environment, of being better than others. This is called greenwashing, so that they can get good publicity, they can get easier loans from the bank, because the bank will also want to include this in their priority sector lending. So what RBI is now trying to do, trying to make sure that we are able to identify those projects, those companies which are involved in greenwashing, so that you don't end up paying them loans, you don't end up paying them more money because of the false promises that they are making. So RBI invited companies, about 13 international regulators and firms have been invited to come up and address this GFIN, that is Global Financial Innovation Network's tech sprint. It's a problem not just in India but around the entire world. This is what greenwashing is: manipulation of a company's product to create a false impression that it has a positive environmental impact. Even if not positive, at least hiding their bad environmental impact. I would really advise you, all of you, to spend 10 minutes and read about the Volkswagen scandal. The Volkswagen scandal was a huge scandal that broke up because apparently Volkswagen was lying about the emissions that were coming out of their car. It became a huge controversy. They had to pay a humongous amount of fine. This is a prime example of greenwashing. So again, when the companies are asking for loan from their product, for their businesses, they can't or they should not hide their environmental impact. If they do, that is called greenwashing. They demand or they present or project their methods and products as much more healthier and safer for the environment. This tech sprint is being organized by Global Financial Innovation Network, which is a collaboration effort of 70 regulatory agencies, and RBI wants even Indian companies to take part in this to find solutions to this particular problem. Next interesting news: India's first ever UPI ATM was launched by Hitachi Payment Services. Now, Hitachi is not a bank, so can they do it? Yes. These are called white label ATMs, which are run by some other company in collaboration with some other banks. These are called white label ATMs. So basically the idea is there are increasing number of scams happening in ATMs where the scammer is using your card details either they fit in a machine. When you input the card, when you put the card in, it will read your card details, give it to the scammer. So carrying these physical cards has also become dangerous. So the idea is to remove the need of that card, and why not have a UPI. So basically what you need to do is you need to have a smartphone on which you have to use a UPI app. It can be any UPI app that you want, Phone Pay, Google Pay, Paytm, Bheem, whatever. And from that you can scan the QR code that will be on the ATM machine and input that pin on your phone, and you will be able to get cash from the machine. That is the entire idea of this particular process. Remember, it is built on Android operating system, and the idea is to do away with old card based technology, because again, keeping cards is not that safe because of increasing number of scams that are coming up. So the RBI is trying to move the people towards a cardless cash withdrawal system. It is being run in collaboration with National Payment Corporation of India, the agency behind the creation of the UPI. It is India's first UPI ATM. Do remember that part as well. Now, how will this work? As I told you, you would need to have your app ready, with the help of which you will be able to scan the QR code. It will be a QR code based UPI withdrawal system. Without the smartphone, without that app of UPI, you will not be able to have all these transactions. So again, it's not that we are entirely moving towards this. There will still be a significant amount of population in the country that would not know how to use the smartphone or how to have this app. They would be more comfortable with the card system. So for them, the cards will obviously continue. Right now, as per the RBI, transactions for this ATM can be done up to rupees 10,000. That is a daily limit for UPI transactions for this ATM. Up to 10,000 rupees can be done. Sticking to a similar topic, RBI launched something called lightweight payment system. Now, what exactly is lightweight payment system? So right now we have a lot of ways to transfer money in India. You have the NEFT, RTGS, UPI, etc. But all of them are based on very heavy technology. They don't work if, let's say, you are in a bad situation, war, or any climate disaster has happened, natural disaster has happened. You might not get great network. In the absence of great network, these kind of technologies will not be able to work. So what RBI has done, they are introducing a concept of lightweight payment so that digital payments can happen even when you are in this situation of emergency, natural disaster, war, etc. So they are building an infrastructure that will be able to work with minimal staff on very low reception of signal. They should be able to work. The infrastructure of this system is independent of UPI, NEFT, etc. It's not using that system. RBI has still not provided a specific timeline when will it be launched. So it's not yet launched in the market, but RBI is working towards that. The idea is to ensure that the zero time is close to, or that the downtime rather is close to zero. Downtime means a time when the technology is not working. For example, your internet connection may not work for some time because it is in the downtime. So downtime means connection issues, network issues, whatever. Also, the idea is the RBI wants to have a minimum requirement of hardware and software to operate this. They want to make it as independent of hardware and software as possible. They want to ensure that critical transactions carry on even when we are in a situation of, let's say, war, or we are in a situation of any climate disaster. When Ukraine-Russia war started, Russia attacked Ukraine's critical infrastructure. So what happened was, the broadband lines and all these critical infrastructure of Ukraine were attacked by Russia. The reason why Ukraine was still able to use the internet was that Elon Musk offered a Starlink. Starlink basically is internet. It's a satellite-based internet system. People could still use internet with the help of that satellite system. That's again an example of why when you are in a war, when you are in a position of a natural disaster, when your infrastructure is destroyed, you still need to have a backup so that the economy can continue. That is what the RBI is working towards. It will also act as a keeper of the record to ensure transparency and the infrastructure would be resilient to manage operations even during extreme conditions. But again, a lot more details are still to come out. RBI has not shared a lot of details about the exact timeline when they would be introducing this. This will be different from the existing systems such as the UPI and NEFT. The difference is UPI and NEFT are very, very robust. There are crores of transactions of UPI that happen every single day, and it is still able to manage without any issue with a very seamless transaction. The lightweight system might not be designed to handle such huge number of transactions, but it will actually be able to work even when there is a problem in the infrastructure and the network. So that is the difference. The lightweight system is not supposed to replace UPI or NEFT. They are much more robust. They will be able to handle much more transaction load. Lightweight system is mainly made for situations where you have a problem and there is not enough infrastructure that is secured. Next important economy news. There is a recommendation, again not implemented, but recommendation that deposit insurance should cover PPIs also. Now, PPI is prepayment instrument. For example, if you use Amazon, Amazon gives you those Amazon wallets. There's an Amazon Pay app that you can use where you can deposit money as kind of a wallet. Ola, if you have that, Ola also have its own wallet. Paytm had wallet. So all these wallets where you can load money and then you can use it later, or where they can give you a loan, you can use the money and then pay that money later. Those are called PPIs, prepayment instrument. So basically right now there is no insurance for this. For example, if let's say you deposited 10,000 rupees in Amazon Pay wallet, tomorrow if Amazon company shuts down, then what will happen to your money? There is no guarantee because there is no insurance on that. But if you have money in the bank and your bank goes bankrupt, then you will get some part of it back because deposits in the bank are covered by DICGC. DICGC is Deposit Insurance and Credit Guarantee Corporation. They have a coverage of up to 5 lakh for your account. So if you had up to 5 lakh rupees in your account, you will be given the money back even if the bank goes bankrupt. If you have more than 5 lakh, you will still get 5 lakh only. But this coverage right now is only with the banks. These prepayment instruments don't get this coverage. So now the suggestion is that this should also be, or this insurance coverage should also be given to prepaid payment instruments. This has been a suggestion by a committee that has reviewed the working of the Deposit Insurance and Credit Guarantee Corporation. Remember, right now it's only available to the banks. Suggestion is to expand it to prepaid payment instruments as well. As I said, there are different types of prepaid payment instruments. Amazon, Ola, Paytm, all of them used to run these wallets, etc. You can load money in them and you can then try and use it. As per the data from RBI, as of 31st March 2023, total number of these instruments was over 16 lakh in India. So again, there are a lot of these wallets that exist in India, and if something wrong happens with those companies, there is still no insurance that you can get on them. A lot of banks have also been authorized to have these PPIs or prepayment instruments. They can offer these to the consumers. The RBI has allowed them. There are non-banks also that do that. Amazon Pay, the example that I gave you, Bajaj Finance, even Delhi Metro Corporation. If you use Delhi Metro, you will have that Delhi Metro card. Let's say if you paid 1,000 rupees and you load that card with 1,000 rupees, tomorrow the Delhi Metro shuts down. I'm not saying it's shutting down, but if Delhi Metro tomorrow shuts down, what happens to 1,000 rupees in the card? It will not be given back because it is not covered with any insurance. So all those are these prepaid payment instruments. The suggestion is to cover them also with this insurance scheme. Now, what is this organization? Do remember this. This usually comes in the news whenever there is any news of a bank going bad. Whenever we have news that bank is going bankrupt or about to go bankrupt, you have this organization in the news time and time again. It's a government organization completely owned by the Reserve Bank of India. It's a statutory body formed in 1961. As I said, it has an insurance deposit of up to 5 lakh rupees per account holder in every single bank. They cover deposits like saving account, current account, recurring account, fixed deposits, all of these are covered. So if you have, let's say more than 5 lakh rupees in your account, you'll only get 5 lakhs back. If you have less than 5 lakh, then you will only get that much money. It's not that if you had 5,000 rupees in your account and the bank goes bankrupt, you will get 5 lakh. No. If you have less than 5 lakh in your account, you will get that much back. If you had more than 5 lakh, only 5 lakh rupees will be given back to you. Also remember, these are the things that they do not cover. This is also very important for the exam. So the insurance does cover saving, fixed, current, recurring account, etc. But these things are not covered by the insurance. For example, any amount due on fixed deposit that are received outside India, any amount exempted by the corporation with the approval of the RBI, any deposits of the foreign government, deposits made by the state at the central government. So if the state or central government has an account in the bank and the bank goes bankrupt, then the government will not get anything back. It's mainly for the individuals, to remember that. Next important news, the IRDAI has been talking about BMA Trinity. So what is BMA Trinity? Basically 3 things related to insurance that IRDAI has been working on. IRDAI, as you know, is a regulatory authority for insurance in India. It stands for Insurance Regulatory and Development Authority of India. So they have been working on 3 things together. First, Bima Sugam means creating a platform. For example, right now, if you want to buy a policy, you go to usually, let's say, policybazar.com. You buy your insurance from there. They will have their own commission. So to have an alternate to that, IRDAI will come up with its own portal called the Bima Sugam. Second thing, Bima Vistar. So they are trying to get one insurance place where you can buy a bundle of insurance. Life insurance, health, property, accidental, all of these you can buy together as a bundle. Third thing that they're focusing on is to have people who can propagate the idea of insurance, called the Bima Vahak. So basically, women-centric workforce will be introduced in each Gram Sabha. So in each Gram Sabha, they will identify some women who have a lot of connections, who talk to people. They will be asked to talk to people, convince them, educate them about the idea of insurance. In India, for the population of our scale, insurance coverage is still very, very, very minimal. So the idea is to ensure that the insurance coverage that is required for health purposes, for life, accident, etc., it should be taken by as many people as possible. Next important news, NABARD recently raised funds using social bonds. What exactly are bonds or social bonds rather? Bonds, you know, is an instrument to raise money. For example, if I say, give me 100 rupees, I will return 110 to you. When you give me 100 rupees, I'll write on a piece of paper, I have taken this much money, I will return 110 to you later on. That's called a bond, where I am actually raising money from the market. Social bond means the money that is raised through these bonds will be used only for social purposes. So if I have a lot of money, I want to see improvement in my society, but I don't know how to use that money, what I can do is I can buy these bonds from NABARD. They will use this money for social impact purposes. So NABARD has done this for the first time. India's first social impact bond has been launched and over 1,000 crore rupees of these bonds have been sold. They are rated AAA, means very, very, very safe. They can also be traded on the Bombay Stock Exchange. They will be listed on the Bombay Stock Exchange, means you can buy and sell on the Bombay Stock Exchange as well. They have a face value of 1 lakh rupee each and there is a 5-year tenure. So after 5 years, the bonds will mature and you will get money back with the interest. These are called social impact bonds. As I said, the idea is that the money will be utilized for funds which have a social impact. So do remember, the question is asked that which agency or which organization raised money using India's first social impact bond, that is NABARD. Do remember that. Now the criteria to make projects eligible to get money under this is that they have to contribute to the environment to mitigate climate change effect. They have to focus on conservation of natural resources, biodiversity, and prevent and control pollution. The projects that promise to improve energy efficiency, green buildings, energy storage, etc., they will also get funding on this. So, for example, you are running a company right now and what you do is you make some cement that will cool down the building or that will decrease the energy requirement of the building. So you can go to NABARD, ask them for a loan and say that I should be given money from these social impact bonds because I am making this project. So NABARD will see if you're eligible or not, and they will give you money under this to run your business. That is the entire idea. So if you're running this kind of an organization, go reach out to NABARD because they have raised over 1,000 crore for this. Last news for this lecture, again from Indian economy. RBI has introduced the concept of card on file for tokenization. Simple idea. When you input your credit card, debit card details on a website to, let's say, buy something from Amazon, order something from Swiggy or Zomato, they are not supposed to save your card details because that can be dangerous. But now you have two options. First option is every single time you buy from Amazon, you input your card detail or you input your card detail on Swiggy, Zomato every single time. Because we are lazy consumers, we don't want to input my card detail every single time. I don't remember my card number. So what I want is the website to save my card. Next time I'll just want to enter OTP and be done with it. But that is not safe. So what RBI has done, introduce a concept of card on file tokenization. So what will happen? Merchants will still save the information but not your exact card number. Your card number, card detail, expiry date, etc. will be stored, but in some other encrypted form, in some other form. Basically a token will be created. For example, I don't want to tell you my name. So I will say, call me Mr. 19. So whenever you say Mr. 19, I will come up, so that I don't want to tell you my name because you may misuse it. Similarly here, I don't want you to store my card number, so you can store this in a form of a token. That is called tokenization. So basically this is what RBI has introduced to enhance the security of digital transactions. The tokens will be unique. It will be exclusive to your card. The token requester and the merchant, they will have access to the token, but they may not be the same entity. They will not be able to decode your card. So it's kind of an encryption where your card details will not really be shown to anyone or will not really be known to anyone. It will be in the form of a token only, and that will ensure that neither do you have to enter your card details every single time, nor do they save your card details on their website. This was today's lecture. We have a lot more topics coming up from Indian economy, and then we'll jump onto environment, geography, so on and so forth. So stay tuned. Join the Telegram channel. Link is in the description of the video, where I will be uploading PDFs of all these so that you can revise later on as well. Other initiatives running on this channel include the mains answer writing initiative. I've started a PSIR initiative as well. So if you have political science as an optional subject, go through that as well. That is called decoding PSIR through answer writing. Thank you so much for watching. Have a good day ahead. Bye bye. Jai Hind.